All right. Thank you, everyone, for attending this month's market update webinar for the month of February. Let's get started with some disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only. It does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Please be sure to first consult with a qualified financial advisor and/or tax professional before implementing anything within this presentation. And of course, past performance is not a guarantee of future results. You can learn more about our disclosures on our website, and throughout the webinar, please feel free to use the Q&A button, and we'll address them at the end. A little bit about us. Silverstone Financial, the firm, is a fee-only fiduciary independent wealth management firm. We provide comprehensive wealth management services, including financial planning, investment management, tax preparation, estate planning, so on. You can learn more about us on our website. And my name is Jeremy Eppley. My co-host is Gordon Achtermann. We're both financial planners. I specialize in inheritance and estate planning, and Gordon specializes in retirement planning and values-aligned investing. Let's get into the markets. So normally we have two of these heat maps. We have the year to date and the month to date. But since those are the same, since this is the first month of the year, we just have January. January was really interesting. It was a very volatile month, but it doesn't show up exactly in the flat indices here, where you just see S&P 500 up 1.4%. Seems like a normal month, not too much volatility. But when you look at the heat map, you can clearly see a lot of bright red and a lot of bright green boxes. And so the brighter red, it means the more losses for the month, the brighter green, the more gains for the month. And you can pretty clearly see there is a what we call a sector rotation, or a style rotation, where these mega cap names, Microsoft, Nvidia, and especially all the software application companies right here, they were rotated out of. The main explanation I've seen is it's multiple compression, which means investors are willing to pay less for each dollar of earnings the company makes. So even if the growth and the earnings stay the same in the company, the investors are afraid of future potential slowing of growth or contraction. So they're willing to pay less, and they sell the company because of that. And for the past year or 2 years, many years actually, the mega cap names, the largest companies in that are publicly traded, were the best performers. So we saw Nvidia and Microsoft and Apple and Amazon and Tesla and Google and so on. All these very large, magnificent seven names, driving the market up. And at least for this month, we saw a little bit of a rotation out of that, a little bit of a reversal, which I would say is healthy for the markets. We saw the S&P 500 top 50 names, the largest 50 companies, were down, surprisingly, actually, only 0.5% for the month. The S&P 500 and GARP, which is growth at a reasonable price, it's a subset of the S&P 500. Those were about between 1.15, 1.42. But the big gainers that they rotated out of these mega cap names into were both US small cap stocks, so smaller companies, also more value oriented small companies, and global ex-US stocks, which are non-US companies like European or emerging market companies. So again, rotating out of those mega cap names into some other forgotten or underinvested names, which makes the rally that we've seen over the past year a little what we call broader, instead of it just being concentrated in a few names. The rest of the indices, aggregate bonds up 0.2%, gold, which we'll talk more about, up 9% for the month, which is surprising because the big headline later on, which we'll discuss, was a big drop in gold right at the end of the month, but it's still up for the month as a whole, is because it ran up a lot and then it dropped a lot, but didn't drop as much as it ran up. Crude oil up 13.6%. So that is, oil is pretty volatile normally, but it's still a pretty big number for a month. It's possible you might see that at the gas pump at some point. We'll see if that is sustained or not. And Bitcoin, another volatile one, down 4%. A lot of that trades with similarly to the largest companies, these tech companies. So it's not surprising that it went down a little bit as well. Anything you want to point out, Gordon?
No, I mean, yeah, it's just amazing how much volatility there is when we look at just the numbers there in terms of big numbers. And we've seen some incredible volatility internationally as well. Some big numbers being put up. Yeah, really interesting month.
Yeah. Well, let's get into some of the news events that happened that caused some of these moves. Um, we're trying something new this month where we didn't get feedback that we were talking too long, but I felt that some of these were going a little long, mostly on because of me. I want to apologize. I do ramble a little bit. So for the first eight news stories, we're going to try to rapid fire, which means we're not going to get into the story behind it. We're mostly going to stick to the headline that the news article is based on, maybe a little bit of context, but not much. And if anyone wants to learn more about any of these stories, feel free to email us at team@silverstone.financial, and we'll be happy to send you the article link for you to read more. So, getting into rapid fire, the first one, LA Rams owner Stan Kroenke, hopefully I'm pronouncing that correctly, becomes the largest U.S. private landowner. I forget who he took over, maybe Bill Gates. I know Bill Gates had a lot of land as well, but Stan now owns around 2.7 million acres, which is certainly a lot of acres.
I pulled up a converter there, and it's 4,219 square miles, which you think about like the original Washington, D.C., 10 miles on a side square, so that would be 100. So it's like DC, Arlington, and Alexandria, and then times 42.
Yeah, it's probably the size of, I don't know, like a
Well,
normal
certainly
size
more than Rhode
state.
Island, but
Yeah, it is probably a large chunk of a lot of states. So,
yeah.
all right, second news item, MrBeast's Beast Industries. So MrBeast is the largest YouTuber, and he has a whole lot of companies that follow his success, and he tries to sell chocolates and other interesting businesses that he has. So Beast Industries as a whole was invested into it by a crypto company, Bitmine. It raised 200 million for Beast Industries at around a $5 billion valuation. It's certainly impressive. I think Jimmy, who is Mr. Beast, who runs Mr. Beast, is in his mid 20s or so. So definitely a young guy to be a billionaire. So very impressive.
Yeah, I think very smart of him to take that deal. Um, it's hard. I mean, he's got a lot of followers and all, but $5 billion, I don't know.
There's also he's famous for reinvesting everything back into the business. Where
Mhm.
I would even say it's so far that it's not always reinvesting; it's spending a little bit frivolously, at least on my opinion. Where he goes into negative cash flow very, very often, and he
Mhm.
just I'm assuming that 200 million was necessary to sustain growth for all his because he's a content creator and content is very expensive, especially when you make it at that kind of scale. So
Mhm.
Yeah, I'm assuming it's a cash flow, more so than taking chips off the table. I don't think that's his plan.
Okay.
Third event, Fidelity Contrafund legend. Will Danoff is going to retire after a 10,500% run. Very much well, legend is the right term in the asset management space. Fidelity Contrafund, a very famous mutual fund that, the contra part of it is investing in ways that are, I guess, not counterintuitive, but against what the market sentiment is sometimes. Very interesting to see.
Yeah, he buys, when everybody is panicked and tech stocks go down, he doubles down and um uh his total funds have a lot more volatility. But that's what you get compensated for in the long run. And he's done it as well as anyone in history, really.
Yeah. So we'll have to see. I'm sure if he continued as long as Warren Buffett, the one reason that Warren Buffett's track record is unbeatable is because he started so young and went until in his mid 90s.
95.
Uh, yeah, I think Will retiring. I don't know how old the picture is, but it looks like in his 60s or 70s. Um, he's missing 20 years of compound growth that he might have been able to catch up with Buffett. But we'll see if Contrafund, how that performance continues. I'm assuming his successors have been well trained in how he does things, and but it's sometimes hard to replicate a specific person's investment style. Um, yeah, we'll have to see. All right, Berkshire plans to exit its 28% stake in Kraft Heinz. This was famously one of Warren Buffett's, speaking of, worst investments, having lost Berkshire Hathaway billions and billions of dollars. They bought it, I think, in the 20 teens, so 13, 14, 15, something like that. And then it just went straight down for the next decade. And the new CEO, now that they've taken over. But Warren Buffett, I think, had already spoken about it last year when Kraft Heinz was planning to, I think, split the company or do something major that Warren Buffett and all the others at Berkshire Hathaway were not into. They said, well, we might have to exit. So the new CEO is following through on that, and we'll see. I think they filed for the sale. When you own that large of a company, that large of a piece of that large of a company, you can't just sell it in a day or just dump it on the market without regulatory disclosures. So I'm not sure when they actually will follow through, but they've made the first steps to get out of the company. All right, four more rapid fire. Not as fast as I intended, but probably as fast as possible for us. So thanks for sticking with it. So Josh Damaro, who is the head of Disney Parks currently, has been named by Disney's board as the next CEO to succeed Bob Iger, effective March 18th. Now, what's interesting about the CEO succession plan for Bob Iger, it's gone back and forth. I think this might be the third. It's definitely the second, but I think it might be the third CEO that has been selected to replace Bob Iger. And then, Bob Iger famously came back out of retirement after the last CEO. And anyway, we'll see if this one sticks. I don't know exactly how old he is, but from his headshot, he seems relatively young. Bob Iger's in his 70s now. So I'm thinking they're trying to pick someone that they want long term and that they're hopefully not going to be flip flopping. We'll have to see.
Mm-hmm.
Next, we got Elon Musk. His rocket company SpaceX has purchased XAI, which is his first Twitter acquisition business that he warped into a AI business with the Grok chatbot, which has had lots of scandals. And now that SpaceX is planning to IPO very soon, some point this year, he has, since I believe he has a controlling interest of both companies, if not, he has a large voting share. He has been able to have SpaceX acquire X at the SpaceX valuation from a financial, like traditional finance point of view, is relatively reasonable. For most analysts, from what I'm seeing, is the XAI deal was, you're valuing an AI company that is on hype and transferring it into stock of a real company, quote unquote, of SpaceX. So it's a little bit, the original SpaceX shareholders probably suffered there, and all the original Twitter holders that are still holding on probably benefited quite a lot by transitioning their shares in XAI into SpaceX. So it definitely, to me, makes when SpaceX IPOs later this year much less attractive. But then again, Elon's vision for his companies has been successful, at least monetarily. And the vision is to have AI in space with data centers in space, and maybe that is the future that is, such a large vision that I don't comprehend. I think it might work, but it's also, I feel, more so to benefit himself and his other backers of XAI financially, more so than an actual smart business combination. I don't think most people would merge SpaceX and XAI if there wasn't the Elon link between the two. Anything to add, Gordon, there?
Oh, I'm just skeptical of the idea of data centers in space in general. Um, but people say, oh, you can get a lot of solar power. Well, yeah, but also you've got a lot of gamma rays in space and other stuff that our atmosphere protects us from. There's a lot of engineering challenges. There's a lot of physics that is going to be tough to overcome.
Yeah, I
But
thought
we'll see.
I hadn't thought as much about the solar. I had thought more about the heat dissipation of just like, well, it's the vacuum of space. You don't really need to worry about heat dissipation. But yeah, now that as you point out, the gamma rays or any other kind of physics that would cause the chips inside the data center to deteriorate faster than they would on Earth. Maybe it is a fool's errand. I guess we'll have to see. It also could be great. I don't know. I'm certain it would reduce latency in some ways for the SpaceX satellites with the Starlink, where right now you have to have latency up to the data center and then down to the Earth, and then from the panel back up to the data center and then back to the Earth. You have to go back and forth, and there's just literal length of distance, speed of light latency that you can't get past. And if instead the data center is right next to it, maybe it reduces latency. So it's possible that's the move. I'm not
Maybe.
sure, but I'm sure there will be a lot of scientists that will have some late nights trying to figure out the science and the physics behind it.
Hmm.
All right, these last two, we don't have much to say, but wanted to add that was the EU approving the South American free trade deal. I believe they also approved an India free trade deal, which then 1 week later, Trump came to a deal with India about reducing tariffs, and it had to do with Russian oil and all these other kinds of interesting uh, back and forth deal making between these countries, geopolitics. Interesting to see. We've definitely been in the era of protectionism where tariffs are all the rage, and it's interesting to see at least the EU going the opposite way, trying to have more free trade, reduce tariffs. Uh, we'll see if that impacts anything. All right. we're going to get into our next slide about the Federal Reserve. Lots of news. It's definitely some of the most headlines for the finance world. So we got four topic areas, all to do with the Federal Reserve.
Yeah, so first one here, um, Chairman Powell, probably most people on the call know that he's under criminal investigation. This is related to the $2.5 billion renovation of the Federal Reserve's offices. Um, my my wife, who used to work in Interior before she retired in May, their building's right near there, just kind of catty corner across. She used to actually park in the Fed's garage before they tore it all up there. Um, and so, I can well see that that was an expensive project. I mean, they gutted this beautiful old building and had to take out different things to be able to put them back when the new structure was finished. These buildings down there were built, a lot of them during the Depression. Um, you know, that's the useful life of buildings like this. The Pentagon went through major reduction renovations a while back, and it was a much bigger building. But I feel like there's always some area of the Pentagon that's being renovated. Um, it's expensive. What's going to happen with that is anybody's guess, but at least one senator, Tom Tillis from North Carolina, has said that he will block any changes to Fed personnel until this thing is resolved. Um, I don't really see it going anywhere. I don't think there's any evidence that I've heard yet on this, but normally when there's this kind of within the government accusations, the president would appoint a special prosecutor so that you have someone from outside who, an attorney that is familiar with these sort of things, or a judge, retired judge or something like that, to look at it. Um, but nobody's mentioned, no, there doesn't seem to be any expectation that Trump would do that. He doesn't seem to want anyone independent. He would rather just continue to lob insults. And I think that'll continue pretty much for the rest of his 4 years, that would be my guess. Um, because, the bottom line is the Fed only controls very short-term interest rates. If they cut too much and the market disagrees with that, with the wisdom of doing that, then longer-term interest rates will actually go up in response. And that will be the exact opposite of what the president is trying to accomplish by jawboning the Fed, which is to get mortgage rates down, and other things that affect businesses and families. And that's not really something the Fed can do anything about. So,
Yeah, I wanted to add the mortgage rates that you brought up. I heard recently it was a good reminder that 30-year mortgage rates follow very closely to the 10-year rate, which again, the Federal Reserve doesn't control. They control very short-term rates, which can affect the 10-year rate, but it is not controlled by it. And the reason is, even though it's a 30-year mortgage, on average, a 30-year mortgage only lasts 10 years or so, due to people paying down early and or selling the house and moving, which is probably the more common way. So on average, across lots of mortgages, it's only about 10 years. But I'm sure also Gordon could talk more about that since your past.
yes, that was quite the obsession of all of us at Freddie Mac when I worked there in my prior career. Um, you're exactly right, Jeremy. The average mortgage lasts a little less than 10 years. And so that's kind of the closest thing. And when um, the rate of return on those treasuries is basically supply and demand. The federal government auctions off treasuries when they need funding, and um, if people perceive more risk, then whether it mostly inflation risk, they're not worried about default so much, but they're worried about tying up their money for 10 years, and they will demand higher rates if they think inflation is going to be higher.
Yeah.
So moving on, the Supreme Court signals it will stop Trump from firing Fed Governor Lisa Cook. This is another one where my former life kind of comes in handy with understanding this one. So Lisa Cook has been accused of mortgage fraud. Basically, they're saying that she claimed more than one house as her primary residence. Interestingly, Mr. Trump himself has done the same thing. In fact, there's nothing illegal about that. Your state of residence for tax purposes can only be one place, but being a primary residence only means that this is not something that you're renting out. It's not a business. You can have more than one, a vacation home, if that's all it's used for, that can be a primary residence as well as another home. So there's really not even any smoke there. They kept saying that they were going to come out with more information on this, and it went all the way to the Supreme Court. And Mr. Pulte, who runs Freddie and Fannie, never came up with the additional information that supposedly was supporting their desire to fire her.
Yeah. To note, Trump, she was fired after Trump accused her on Twitter, and there was no actual criminal investigation. It was his technical word, and his word being enough to then fire her. And it's all the way at the Supreme Court before a lower court ruling has even occurred, which usually doesn't happen. The Supreme Court usually rules on procedural things or other, and they defer to lower courts for the factual, is this right or not? And it got so up to the Supreme Court so quickly because it was an emergency injunction or something where because this is very impactful to other things other than just Lisa Cook. They were trying to figure out if he even had the right to fire her for cause when there hasn't been official cause proven in the court system. So if there's any kind of uh, what's the word I'm trying to think of right now, where you not procedure, but when you have due process. That's what I was trying to.
Yes.
So when there isn't due process, it will be interesting to see. I would be surprised if this goes anywhere as well.
Yeah, Brett Kavanaugh, who's probably the deciding vote on this, said, well, if we allow this firing, basically everyone is at will. And he said, what goes around comes around. And if the firing was allowed to go through, then you could expect every single person who was ever appointed by Trump to be fired, when the next administration comes in, or every time there's a party change, and that would really increase the kind of winner takes all instability that our system has historically been designed to avoid.
It's interesting, and I think that's is a good point by Kavanaugh. It is, though, concerning that it seems very clearly, like, of course, it's very known that the Supreme Court has been politicized over the years more and more and more, but like that seems very outright of like taking sides with the administration, saying, what goes around comes around. To me, the Supreme Court really should just be asking, do you have a legal right? Not like, should this be done based off of the political ramifications of it? Which, just a side note, interesting thought process, but it's not really finance news necessarily.
Yeah, that's a great point, because there's no law saying, rating the agencies as to their level of independence. The court has let him fire Democrats who were in the what was it, the Federal Trade or Federal Elections Commission,
Yeah.
some less powerful, some
Consumer
theoretically
protections,
less powerful
a lot of that.
independent boards. But the Fed, it's like that's where the money is, and that's a really big deal. So they seem to be staking out a position where the Fed is like requires the highest level of scrutiny and independence.
Yeah.
So again, the next piece on the Fed, holding interest rates flat. Um, you know, there's so much data, and the news media really focuses on just a couple of points. The core inflation rate, and then Chair Powell in particular likes the um, personal consumption index. So that's just how much are households spending. Um, is the total spend of consumers rising faster than the economy? And but there's other things too, like the producer price index came in quite a bit higher than expected a week ago, or 2 weeks ago. And so, there's so much it the Fed looks at so much more data than we really can digest unless we want to make that our full-time job as being a Fed watcher. And there are people who, that's what they do. They work for the big banks and other financial institutions. Um, so not really surprised that they're waiting for more definitive data. It seems like the right call to me.
Yeah, definitely some conflicting data. So it
Mhm.
makes sense.
And last one on notable events. Trump has nominated Kevin Warsh as the new Federal Reserve Chair. Interesting. I feel like this could have been much more extreme, much worse from my point of view. But Warsh was known as kind of a inflation hawk during the Bush administration. And so that would not be someone who would cut rates, you would think. But he definitely wants to shake things up in terms of what data the Fed looks at and how it operates. Um, he's been around. He's worked at Treasury, under Bush, and during the financial crisis, he handled, I think it was the transition of Bear Stearns over to being taken over by um, uh, JP Morgan. Um, one of those big transitions that happened when some of the institutions collapsed. So he's got good experience. He's not a big outsider. I feel like this is not a terrible choice. He's saying all the things, a lot of things that um, you would have to say in order to get Trump to nominate you. But I think when you look at his biography and as a whole, it remains to be seen really what he'll do. And I expect um, I expect some the unexpected when it comes to this transition. It'll be very interesting. We'll be watching it closely.
Yeah, I'll Yeah, I agree. He's not as extreme as yeah, Trump could probably find. However, he has been saying a lot of things which you would have to say, like Gordon has mentioned, for Trump to give you the thumbs up. So it really depends on how much he follows through with his lip service to Trump versus his actual underlying beliefs, which it'll be hard to say. I'll also mention as Gordon had said in the first article about the Fed, there was a senator from South Carolina or North Carolina that
North
is
Carolina.
that's a Republican who was very he was not seeking reelection, by the way, who is was very upset with how the Jerome Powell criminal investigation happened, and said that he wouldn't approve any chair until that's resolved. And I think he's on the banking committee or something. He actually has a vote, like a strong enough vote that it might actually impact things. Also, the Senate's so tight that one Republican vote might be able to prevent approvals like this. So it is possible that Kevin Warsh will not be the future Federal Reserve Chair, but that's to be seen. Since he's been nominated, he's likely to, but it's not a guarantee just yet. And also, we'll mention it when we talk about gold and silver. The big crash occurred the day that he was nominated, and we'll discuss that more on the next slide.
Okay, so I'm doing these next two, right?
Yeah, yeah,
Okay. So, yeah, eight European nations threatened with 25% tariffs over Greenland purchase. Um, I don't think that 700 billion, that's just was somebody's estimate as to like, I don't
yeah.
know what it's worth. Um,
Potential $700 billion purchase of Greenland, but
yeah,
it's to be seen. And we don't even know
seems
if it's a quote unquote purchase.
seems awfully low. I mean, the Louisiana purchase was something like 40 million, and after inflation, that would be a lot more than 700 million, 200 plus years later. Um, so yeah, the eight countries, Denmark, Norway, Sweden, France, Germany, the UK, Netherlands, and Finland. So, the northern European ones, um, the Baltic states of Lithuania, Estonia, and Latvia left out, um, and
Guess they won't have
Poland.
enough of an impact.
Yeah, I guess, why those eight? I don't know. Um,
Was there a reason in the first place? We don't know either.
right. So, but the thing is, these tariffs aren't set to go and play into effect until June 1st. So that's a ways off. Um, I feel like they've kind of moved on from Greenland. You don't hear about that much. I'm sure he'll bring it up, periodically, but
Got 3 more years to to bring it up.
yeah. Really, if we're really worried about security in the Arctic, we should be worried about the Bering Strait, which is where Alaska nearly touches Russia. In fact, oftentimes in the winter, um, there's so much ice that, it's like connected by by the Arctic Circle. Um, and you could actually, if you wanted to, sled dog across between countries, you probably could. So that's a narrower choke point. That's the passage where China would really, if they want to be able to get goods to, Norway, for example, that's where they would have to go right by the U.S. Um, if we really want to worry about Arctic security, that's where we should start. And so um, I think that people in the defense serious analysts in the area of national defense are certainly much more focused on that than they are Greenland. And if this ever got really serious, people would be pointing out the silliness of focusing on Greenland.
Well, a lot of it, I think it's pretty transparent. He wants the resources. He was pretty transparent very quickly with Venezuela, and a lot of it he's talking about, mineral deals and such. It's also the security of being able to get these rare earths and not having the dependence on China. It's definitely interesting to see him pushing for this. He wants these natural resources. Um, yeah. It's hard to say it's really for the national security with the ability for
Hmm.
to expand. The base is already there, but like it's
Well,
possible he might be able to push it through. We'll see if we go to World War III, if we buy Greenland, or if this just fizzles and we don't hear about it again.
well, the thing is, we already have treaty rights to put bases up there, and if we want to mine there, similar to North Sea oil, the UK and Norway were able to come to a revenue sharing. Um, I'm quite sure that Denmark would be happy to allow U.S. companies to mine there with as long as they are able to participate in what comes out of it, and as long as the Greenlanders, have a voice in keeping whatever pollutions are the result of mining away from, where the people live.
I think that does come down to one of the big the that is a solution, the compromise solution. But I think the concerns are the how the Greenlanders have been in the past, where they're very, very strict on environmental protections, and that prevents the scale of mining that the Americans want to do. So, if you can buy the country and then ignore the people's opinions, that would solve a lot of problems for the mining companies. But of course, it might not be what's best for the environment or the people there.
Yeah, the whole idea of rare earths is a little bit of a misnomer. Um, there's a lot of these minerals are all over the place, and it's just a matter of filtering them out of and investing in the infrastructure um, to separate them out from other mining type processes. China has invested in that, uh, y- you know, so I don't know. It's I'm sure we don't even really know what's in Greenland anyway. It's so much.
There's a lot of ice that's covering it. Yeah.
Yeah. All right. You're up next, Jeremy.
Well, I guess for the Senate, a lot of it's still unknown, where the spending bills are coming back and forth, and there's a possible future government shutdown. There isn't much news there, so we'll cover that more in probably the future month. As
I'm sorry. I was looking at the Greenland picture and thought that we had already covered that second bill.
No
But
worries.
yeah, I agree with you on that. Events have kind of moved forward from when have continued to, like, on a daily basis on this one. So we had a shutdown briefly. That's I don't know if it was signed today, but basically, there's going to be another week or two of negotiation um, on the Homeland Security piece and ICE funding. And if there is a further shutdown after that, it'll be just for uh, Homeland Security.
Yeah. All right. Well, I'll try to wrap up. We're getting on to 45 minutes here, so I'll try to wrap off these last two um, uh, topics relatively quickly as it makes sense for me. So the New York Stock Exchange. it announced that it's developing a regulated platform to trade and settle tokenized securities, which means essentially the stocks, how they currently trade, they would make tokenized versions of them on a blockchain, and it would help with how the ledgers work. So currently, the ledgers they trade, and I think overnight, or not sure the exact mechanics, but they are reconciled each day, and that's why you have settlement periods where you buy or sell a stock, but the cash doesn't settle for a day after. Here, a version using the cryptocurrency blockchain technology, which has long been said to be an improvement on how banks do their ledgers and how exchanges do their ledgers, and potential for also changing how like houses are titled instead of sending a certificate that's signed in paper and to your local office. It would be just on a blockchain that's publicly accessible and publicly verifiable. So I'm excited for in that future when you don't have to notarize those kinds of housing documents. But here is the same kind of idea where with a tokenized security platform, that it would allow for 24/7 operations, instant on-chain settlement, so you don't need to wait a day. You'd be able to trade in fractional and or dollar-based order sizes instead of just share-based order sizes. The equities and ETFs would be supported, and not just stocks. So you'd be able to have some funds, anything that would be traded on there. It would give better governance rights and dividend payments. It would be able to happen instantaneously. The votes would be able to be done more quickly and more transparently. So there's a lot of benefits here. There was no official launch timeline announced. I'm sure New York Stock Exchange and NASDAQ and the new one that's coming in Texas, the Houston or wherever stock exchange that we mentioned, I think last year in one of our webinars, they're probably all racing to try to figure out how to make this work and be scalable and secure. And I'm sure it's a very difficult problem to solve, especially with the making sure that all these transactions, millions and millions and millions of transactions per day, worth trillions of dollars, you don't want to mess that up. So they're probably trying to make sure their systems are correct and able to handle the load. To be determined. I know when Gordon and I had spoken about this personally, we were wondering about if there would be a big increase in electricity costs, because that's been a criticism of cryptocurrencies and such. But I guess we'll have to see. I don't know. We don't know how they're building it or what technologies exactly they're using. And then the last topic for the day, which was probably the headline that captivated most people, at least recently at the end of the month, was the gold and specifically the silver plunge. It had its worst day since 1980. So gold and silver were really very volatile this past month. A lot of it had to do with the weak dollar, people trying to diversify away from the dollar, the fear of the dollar, and a lot of that has to do with the Federal Reserve potentially losing independence, losing the potential for inflation, all these different concerns if they cut rates and such. So gold and silver, gold fell about 10% in a day, which was its largest one-day dollar drop on record ever. I believe. And then silver plunged roughly 30%. So about 3 times as much. Silver's always been more volatile, or at least in recent memory, has always been more volatile than gold. For those that think of like leveraged positions, silver usually jumps higher than gold when gold goes up, and it falls farther than gold when gold goes down. So it follows gold very closely, but just has more significant swings up and down. It has those multiplied, what we call high betas in finance. This was all happened at least on the day that Trump announced Kevin Warsh as the future chair to the Federal Reserve. He's been seen as hawkish on inflation, as Gordon had mentioned, which means he's less likely to cut rates than the market anticipated, whoever Trump would pick. And a lot of the gold stockpiling and trading and speculation had to do with the idea that Trump would pick someone that would really push rates to be cut and lose the independence of the Fed and make the dollar lose a lot of value, which would mean that gold would make a lot of sense as an investment, as a hedge to that. Now, to be fair, the gold market is huge. There's industrial reasons for gold and silver. There's speculative reasons for gold and silver. There's hedging reasons for gold and silver. There's a store of value reasons for gold and silver. There's a lot of reasons people trade and buy and hold silver. So you can't exactly say it was just because of Kevin Warsh. I think there was a lot of reasons. There was also a big run up into this big sell off. So it was kind of when you'd say you putting gasoline by a fireplace, it's not surprising that everything blows up. It was already very red hot to begin with before this crash happened in a single day. There was also a lot of leverage being used. Some commentators are mentioning those being starting to get popular, especially silver and the retail traders, the meme stock people, that was getting very frothy, as we'd say in the stock market. So all that can cause basically short squeezes, forced liquidations, all these kinds of. Also, it can trigger various. All this is algorithmic now, so big computers sometimes can see lots of tradings happen, and it triggers their rules for safety protection, which causes drops to go deeper. So lots of reasons. No one really knows exactly why, but certainly was a scary day for metal traders that day. Yeah, super interesting. Anything to add, Gordon?
Well, 1980 is the worst day since 1980. That was when Paul Volcker was the first monetarist Fed chairman we had, appointed by Jimmy Carter. And he pledged that he would break the back of inflation, no matter how high he had to raise interest rates. And it took a couple of years, but interest rates were going up very sharply in 1980, and that's when we started to see some progress on inflation. And it was clear that Volcker was there to stay. Reagan was running for president then and supported the idea of, doing what it takes to crush inflation, while still managing to blame Carter for getting to that point in the first place. Uh, you know, as politicians always do, on either side. So yeah, I feel like there's some parallels to 1980. Very different trade kind of atmosphere, but when it comes to inflation and the Fed, we see some kind of rhyming going on with past history. As they say, history doesn't repeat, but it does rhyme, and I feel like yeah, it's doing so in this case.
Yeah, we're seeing a lot of that. We've mentioned before in past webinars where some of the um, uh, PE multiples of the price that people pay for companies in the markets are reminiscent of dot-com era, where it's a different time than 1980, but we're still seeing other kinds of rhymes. Now we saw a little bit of reversal there this month where people sold off, saw multiple compression, kind of reversing a little bit of that fear. We also, the gold running up was, indicative of fear. Interesting is even with this largest loss in a single day, gold's still up. So
Mhm.
it's we gotta realize that even with these reversals that we're seeing, we're still very high from where we were not that long ago, a year ago. And a lot of the risks still remain. And we definitely watch that very closely for our clients. And we have those kinds of conversations every day. So, uh, what can you do other than watch and be prepared? So,
Hmm.
All
Yeah,
right.
gold's still well above its um, medium term trading moving average.
Yeah, which means that yes, it's higher
The
than
trend,
yeah the trend.
the trend's still solidly up.
All right. Well, this month was relatively quiet. I don't think I saw any questions come in today. If any of you currently watching or on the recording or the podcast have questions, feel free again to reach out to us. You can find us on LinkedIn, or you can reach out to us, team at Silverstone Financial. Happy to chat if anyone ever has questions or any clients that have specific questions to your situation. Happy to cover those. So I guess we'll end it here, and we'll speak with everyone again in March. Um, yeah, I wish you all a happy and fruitful February.
Yes, happy President's Day coming up soon. Uh, happy Valentine's Day if you celebrate the Hallmark holiday of Valentine's. And we'll see you in a month.
All right. See you, everyone.